Can buyers get an SBA loan to buy your business? Well, the answer is not always. And here's the part most business owners don't realize. It's not just the buyer that has to qualify, the business has to qualify too. We've seen plenty of situations where buyers have strong credit, plenty of cash and experience, but the financing still fell apart because of issues with the business itself. So that's why we're talking with SBA lender Scott Asbury with Huntington National Bank about what makes a business SBA financeable, why some deals get denied, and what business owners can do before they go to market. Welcome back. I'm Jenna with Transworld Business Advisors of Ontario, where my husband Jeff and I help business owners sell businesses in Southern California. Scott, thanks so much for being with us today. Tell our listeners a little bit about who you are.
Thanks, Jenna. Great to be on again. I sit in Southern California, sunny San Diego, and I've been supporting small and mid-sized businesses for about 20 years. Been on the banking side for 15 years and on the SBA side for 10 years. In SBA, I do a lot of business acquisitions for entrepreneurs that are aspiring to buy businesses, existing business owners that are looking to scale and expand, and even startup. So been doing this a long time. Love to see dreams come true through financing and SBA financing specifically.
Well, perfect. Well, obviously, we have the right person on the video today. So let's jump into a couple questions. So when buyers ask Jeff and I whether they can get an SBA loan to buy a business, what most people don't understand is that the business actually has to qualify too. So can you explain what that means?
Yeah, unlike consumer financing, a lot of times I'll get the same thing. We'll get, maybe it's an individual that's coming out of, the corporate world and the W-2 job that's used to going to the bank and getting a loan to buy a home or to buy a car. And a lot of times it's debt to income ratio. On
Mhm.
business financing, it's much different. Those are important. It's important for a buyer's personal financial situation. But what we do is we approve the business first and then the borrower. So a lender has to ensure that the cash flow and the financial trends in the business are stable and can support the new debt that our borrower is taking on. So we always are going to make sure that the business financials are healthy. That's how we're approving the loan. And then we kind of tie our borrower in and their existing liabilities.
So it sounds like the business getting qualified first or happens first and then the buyer.
Correct. If
Yeah.
business doesn't qualify, we don't even need to go to the borrower because it's always business has to stand on its own, be healthy, support the new debt, and then not just the new loan, of course, that it's, the borrower coming in is going to have enough cash flow to continue to reinvest back into the business for continued long-term success.
So when you're shopping for a business, you'll often be able to see in that business listing a box checked or maybe a banner that says SBA financing available. So another question I have for you is what are some of the biggest reasons that businesses may not qualify for SBA financing?
There's a few reasons. I'll make a couple points on the most common. So I say that
Okay.
the most common for one is the seller's just really not prepared. They haven't talked to their CPA, their individuals to get the financials in order. And sometimes that happens, and it's no fault of the seller. Life circumstances happen, things happen with families, something happens where they have to move
Yeah.
quickly, and they just weren't prepared. So
Mhm.
that can happen. Sometimes the business model, just there's some risk associated with it. Maybe it's high customer concentration. They haven't diversified out enough to where a lender and a borrower could be worried that if the seller leaves and leaves with that relationship,
Yep.
that the business faults. And the other part of that is going to be just eligibility. It depends on the industry type. There's higher risk industries that are out there. But for the most part, I'd say most lenders are agnostic, and we're more looking for, healthy trends in the business and cash flow, and how long that business has been available. So um, we like to see businesses that are, at least have 3 years of historical financials. So newer businesses often can be ineligible, and then businesses that are tied to, call it, kind of riskier or
Mm.
industries that can could be bad PR for the bank, whether that's cannabis industries,
Okay.
guns, those type of things.
Okay. Well, and you talked about 3 years of financials. So tell me more about how important clean financials are, profit and loss statements, tax returns, P&Ls matching a tax return. How far back do you need and what should people be thinking about if they want clean financials that are going to get them SBA financeable?
Yeah, I mean, what SBA's and I think banking, what we were required to look at is 3 years of business tax returns. So
Okay.
right now we're sitting in, May of 2026. A lot of businesses are on extension for various reasons. So we might not
Hmm.
have a 2025 tax return. And that's okay. There might be a case where the lender is going to ask for 2025 if that's the strongest year. But really, we'd want to see, 22, 23, 24 if they don't have their 25, or ideally 23, 24, and 25. Because banks are federally regulated, and the SBA has initial, regulations in itself as well. It's a government-backed loan. There's measures in place to make sure that banks are putting people in the proper loans, that there's not fraudulent activity happening out
Hmm.
there. In the scheme of things, back in '08 when the market crashed, there were
Right.
a lot of people getting into loans they shouldn't have been getting into, and some
Yeah.
of that had to do with, lenders being a little too loose in their regulations, and then, government slash taxpayer fails or backs banks that bail out. So as much as we might believe that the business is extremely profitable, that the way that they're reporting their taxes and their income doesn't correlate to the true profit if personal expenses are
Hmm.
being blended in there,
Yep.
a borrower might feel comfortable by looking at bank statements, by maybe they're an inside buyer, they work for the GM of the company they're buying and they know the true profitability.
That. Yeah.
But a bank really has to go off of what's being reported to the IRS as true expenses and income. Um, and that's what we're tied to. Because if a lender doesn't, we open ourselves up for fines, for all kinds of stuff. So
We could
that's
probably
the
spend
importance of it.
Yeah, we could probably spend 20 minutes talking about sellers putting personal expenses into their business and into their tax returns and trying to back those out. But that typically, if there's too many personal expenses into the financials, even if the business is still profitable, it's my understanding that that can be one of the things that can cause the business to not qualify for SBA. Is that correct?
It can. It specifically if the and I know Jenna, we're going to get to this in a little bit, but specifically if it's driving that net income, that profit down, which as a lender and for you as a seller, if you're watching this, we want your net income, your profit number to be high. The higher that is, the higher your business evaluation is, the more Jenna can sell your business for.
Exactly.
Um, so, we'll talk about, some prep, talking to your CPA about, let's look at a different strategy if you know that you're going to be selling in the future. But when you're
Great point.
blending personal expenses in there, and I'll just give you one example, is if it's an HVAC company that has vehicles associated where there's gas expenses, maintenance expenses,
Mhm.
leases, all of that, and you're putting your family's personal vehicles and your personal cars through the business, even though we could potentially verify and look at statements that show those vehicles that they're family members and tied to a family member's name,
Mhm.
still is the same expense as the business. And for the government's eyes, it's really hard for us to pull that apart because it
Yeah.
it it is a business expense that makes sense with it makes sense with an HVAC company. So it's not like a completely different expense where if it's a floral shop that has heavy travel expenses, if it's a retail shop. Now that
Right.
we might be able to work on, getting what we call add backs on something like that.
Well, let's change gears a little bit and talk about when a business is SBA financeable, like we've done the SBA pre-qual, how does that actually speed up the sales process? Like if something that's important to a seller is getting the deal done quickly, getting to closing fast, how can having that SBA pre-qual done ahead of time get the deal done faster?
In my experience, anytime I have a business that's pre-qualified in advance, um, the conversion of getting that deal to closing is probably, 90%. It's going to speed it up. I can't tell you how many times, I get a listing that I haven't looked at financials yet. If it's an off-market deal, especially, um, we're having to wait, especially depending on the season on when you're selling the business.
Hmm.
A lot of times, as a lender, based off of what time of the year it is, we could give guidance on in year how far down we're going to need to see what we call interim financials. Maybe it's through April of 2026 for a balance sheet of P&L. If a CPA is at its peak season, some CPAs are on vacation. Sometimes it's
Yep.
harder for them. It could take a month to be able to get updated financials. And we might be at a spot where we can't close without those because we're relying on those financials to get to the financing amount that we need. So in advance, there's a couple things that where I've seen deals where we've kind of saved the deal, and this is probably even another one of your questions on how can talking and getting pre-qualified um, get ahead of any potential issues that
Absolutely.
could cause it not to close later. There's a
Great.
lot
Yeah.
of times where we might be able to see something in the financials, whether there's trends in the cost of goods sold, which increased or decreased previously, where you can get ahead of sooner and say, hey, I'll go, Jenna, we've got 23, 24, 25 tax returns, 24. We're seeing some fluctuation with COGS here. Could you talk with the seller and find out what that is? A lot of times they have to go back to their CPA too to say, hey, why did we
Yep.
do it this way? And there's a lot of good, valid business reasons why that happened that we're okay with. But instead of waiting the weeks before, or you can put that information out up front in the your SIM or the kind of the seller overview sheet, we can get ahead of that information. There's also situations where a tax return might not reflect the true profit that we need, and you could guide the client to go back and get that redacted. I know you were going to jump in.
Great
Sorry,
point.
Jenna.
Oh, no, you brought up so many great points there. And Jeff does our valuations, the business valuations or the BOVs. And we see this a lot where even just to get the information to find out what the business is worth, like what list price we would put it on the market for, it's, well, I need to get with my CPA, I need to get with my bookkeeper, we need to tighten up some reports. And to your point, now you're on somebody else's time frame. And if they're it's tax season or, they're on vacation. Now you're waiting on that. So those are just other things that sellers can do to prepare ahead of time to make sure that
Yep.
we can help them get the most for their business and help it close in the fastest amount of time. Let's talk about the buyer pool. So how does SBA financing affect the buyer pool?
Yeah, I mean, I think, there's obviously certain situations, certain deals, depending deal size, whatever that is, where maybe it makes sense and a borrower is not going to leverage financing. In my
Mhm.
experience with the pool of borrowers out there or buyers out there, most of them, from what I see, are leveraging financing for multiple reasons. So for one, if you get, SBA pre-qualified in advance, you can reach a much larger pool. A
Mhm.
lot of people, especially depending on the area, Jenna and I are on the West Coast. The cost of living out here is extremely high. A lot of people aren't just sitting on, piles of cash here, and some
Mhm.
are, but the ones that do have a lot of cash are putting that cash to work for them. They've got wealth managers that have that money in a portfolio that's, already earning income, and maybe it's earning
Sure.
6, 8, 10, 12% for them. And to pull those funds to put it into the business, might be costly. So a lot of times they're going to leverage SBA financing for one, to have the purchasing power to buy a larger business. So they might still pull into some of their personal liquidity, um, but they're going to, if they know they have access to capital, they're willing to maybe buy more. The other part of that is they have access to potentially, depending on the business they're looking at and their goals and their experience on what they want to do with the business, maybe they want to hold on to some of their cash to reinvest into the business to scale later. So they're
Yes.
going to leverage the SBA financing up front, again, to be able to have the comfort of having their funds for later. So there's a
Absolutely.
multitude of reasons. They always say cash is king. Most people want to hang on to their cash for the
Mhm.
unforeseen, for the kids that are coming into college soon, for the next opportunity that they might only have a week or 2 weeks to try to jump on, and they need that cash.
Right. You brought up so many good points. And, when Jeff and I get calls on listings that we have up for sale, that's when we're pre qualifying the buyer for the seller. That's one of the things we do. We have conversations with the buyer. How are you planning to pay for it? How much cash do you have? Where is the cash coming from? And time again, we hear, oh, we're going to get SBA financing. And often our answer is, well, this business didn't qualify for SBA. So I kind of feel like from the phone calls we get, that by having your business already SBA approved, by the time you go to market, it would probably double the amount of
Yeah.
buyers that would
Yeah.
then qualify, be interested, want to move forward. Once we say the business isn't, doesn't qualify for SBA, they are like, oh, well, I'm going to need to move on. I don't have
Yeah.
750,000 or $1 million in cash.
And what I'd say, that let me even expand on that. What I've seen, and I know you've seen, Jenna, is when a borrower or a buyer, I should say, I always call them borrowers.
Right.
Your end, it's buyers. They're
Right.
borrowers, client on mine. But when they see a listing that says it's SBA pre-qualified, I think it already triggers some confidence in that business to say, hey,
100%.
a bank looked at the financials, especially a government-backed loan is signing off on this business. Um, I know that if they have the opportunity to pay cash, you know, Jenna and Jeff are not going to be scared to say, yeah, let's go ahead and go that route. But you're automatically, I think the perception of the buyer is that this is a really good business. It's clean. My due
Yes.
diligence might not be as extensive.
Yep.
It kind of just makes it look a lot more appealing.
100%. That buyer confidence definitely goes up when it has that SBA financing already and creates questions right off the bat if it's not.
Yeah.
So we touched on this just a little bit, but if kind of in closing, why don't you tell us what anyone who's thinking of selling their business in the next 1 to 3 years, what should they start doing now?
Yeah, I think the biggest thing is start talking to your advisors. Every business owner, we know you guys have multiple hats that you're wearing, multiple advisors, and so there's always a tax strategy in business. It's how can we mitigate the liabilities that we're gonna have to pay at the end, either installment payments or at the end of the year. And if you have a
Totally.
really good CPA, you guys have a strategy in place where you're probably not paying a ton of taxes on that. You want
Mhm.
to do the opposite when you're preparing to sell the business
Yep.
because you're going to pay a little bit more in taxes now, but it's going to be, you're going to get a much larger payout on your business evaluation if you're showing that true profit. So for one, it's making sure that you and your CPA, are in alignment. You also want to start talking to, if you have a financial advisor, a retirement planner, so they can talk to you too about what's the expectation on how much you need to sell the business for, how much do you need to retire. So you want to start talking about that. So there's a goal in mind. And
Absolutely.
if there's a gap, you want to bring in Jenna and Jeff. You want to talk to them to say, hey, talk to my CPA already,
Yep.
talk to my retirement planner, my retirement planner. This is kind of where we think we need to land. They could give you some guidance based off of what your industry and business is on how could we make your business more attractive to the buyer pool. Is there
Yep.
some equipment that we can upgrade? Can we revamp? If you think about, you know, is it
Hiring
going to
that
be
manager.
yeah, is it going to be a millennial or a Gen X person that's going to be, taking over the business? Do we need to upgrade the website a little bit to kind of make it
Hmm.
look like this is a more up-to-date business? So there's just different things. Yeah, making sure there's key employees in place, talking through
Totally.
that, getting the records of the business clean, kind of what we've talked about. Those kind of things just, in order. Um, there's a lot of different ways that I think Jenna and Jeff can go in trying to help optimize and maximize your purchase price if you're talking to individuals in advance.
As you can see, there's so many professionals that need to be part of your team when you're looking at selling your business, including having a great SBA lender on your side. So, Scott, how would somebody reach out to you if they wanted to have you look at their financials for getting SBA pre-qualified?
Yeah, and it really depends on the comfort level of the individual that be sending financials over. Sometimes people want to have a conversation before sending something over, but we can plug, my email, my phone number, a phone call, email is fine. And then, of course, I have secure portals where anyone could upload that information. I'll typically ask for, 3 years of business tax returns, P&Ls if you have them, income statements, and a year to date. And then I could give, guidance from there. Or you could always provide them to Jeff and Jenna, and they have a platform where they can upload them to me, which I do and pre-qualify a lot of their businesses. We have a system and a routine in place, and we try to get that process done in a quick manner.
Gotta love a process, right?
Yeah.
Well, as you've heard, if you're thinking about selling a business, understanding whether your business is SBA financeable can have a huge impact on the kind of buyers that you attract, how quickly your business sells, and being able to get top dollar. And at Transworld Business Advisors, Jeff and I help business owners prepare for that sale long before it goes live with all of the things that you've heard about today, because preparation creates a much stronger buyer market and smoother escrows. If you found this video helpful, be sure to give us a like and subscribe and to share it with other people that might be thinking about selling their business. And if you have questions about selling your business, if you'd like a business evaluation, if you'd like to connect with Jeff and I or with Scott, all you have to do is click the link below and we'll get you connected because planning produces profits. Thanks again, everybody.